Good morning. This is Richard Calhoun with Creekside Realty. 40 years of real estate broker here in Silicon Valley. We're going to be talking about COVID and the impact on the weekly real estate market. And I'm happy to work with any consumers understanding the data or meeting their real estate needs. The handouts are available. You can get them using this teeny URL /RE market graphs handout and then the date code 2020-1010. And you can get to future presentations by the root URL, which is in the green, and then just the year 2020, and archive will be available at the end of the meeting, probably closer to about 6 o'clock this evening, by adding the date code to the base URL. So with that, we'll get into the data. We are now in week number 40, and that's the 40th week of the year. Shelter in place was announced at week number 10. What we're looking at is the macro data. Macro data is single-family homes, condos, and townhouses in both San Mateo County and Santa Clara County. I normally don't look at this data, but this gives you an idea of what's happening to the overall marketplace. The actual data is the blue line, and then the gold line is the 5-year median, the 5 years being 2015 through 2019, which were all 5 great years. You can see that the blue line and the gold line are basically on top of one another, which is why the percentage, the red jaggedy line, is almost essentially on the horizontal red line, which would be 100% if we were having a completely normal year. You'll notice there's some offsets, and that's because the calendar fluctuates. Sometimes Labor Day was the latest it possibly could be this year, so it came in a week later than it normally falls. But for the most part, you can see we're right on there. The other thing you'll see is the normal perturbations for holidays, and I think this would have been Memorial Day, and then this is probably July the 4th, and this is probably Labor Day, aren't happening this year. And that's because real estate is an optional event. With shelter in place happening, optional events aren't happening, and so people are able to continue with their real estate. So basically, based on the number of available houses for people to buy, consumers to buy, we're having an exactly normal year. And that's normal based on the last 5 years, which have been 5 great years. Moving on to the number of new listings. So this is just what came onto the market in the last week. The concept's the same. This fluctuates a lot more because now instead of looking at everything on the market, so there's some stability to it, you're looking at just what's happened in the past week. The blue line is the data. So you can see when shelter in place was announced, you had a huge drop in the number of new listings. It was basically along the bottom, a plateau, and then we could start showing houses, and boom, it came right back up to essentially normal. And it's been normal. It's been a little bit on the high side of normal right now. I believe what's happening is the consumers are having a need for shelter in place for larger homes. So they're trading off convenient commute for a larger home. And that's causing a lot of people that normally wouldn't be in the marketplace to be in the marketplace. So now we've had several weeks in a row of above normal number of new listings coming on the market, which are buyers that bought and now they're selling their house. Offers accepted. So this is the demand side. You can see the same concept. The blue line has been above the gold line every week since about week 25. So again, COVID shelter in place happened in week number 10. There was basically somewhere around 12 weeks, maybe even 14 weeks, where we couldn't show properties. Right about here, May 1st, it was May 1st when we could start showing properties. And then May 1st on, it's been fairly normal. Yes, we have to jump through some more hoops to show properties. We have to social distance. We have to sign a PED form and that kind of stuff. But we're out there showing houses and getting houses accepted. Because the blue line is above the 5-year median, that means we're selling more homes. You can see the dip down for Labor Day. This is a dip down for Memorial Day, for July the 4th. You can see the dip downs are happening this year, but they're not as stark. They're not as deep as the 5-year median. Now we're moving on to the number of closings. Closings lag behind by the length of escrow. And so you can see now the number of closings are starting to be above normal because the blue line is above the gold line. And that's basically started happening right about here, somewhere around week 33, week 34. It was pretty close, but now all of a sudden about week 36, there's a big separation where all the extra offers accepted are now closing, and we're having more closings. Now we're going to look at the number of expired listings. Again, this is 1 week data. That's why you can see how much bouncing there is. Even the 5-year median bounces a lot. It bounces at the end of the month. listing agents tend to expire listings at the end of the month, and that's what the big spikes are. You can see that the blue line is above the gold line, which is a bad thing, which might initially be hard to explain, but it's pretty simple. Back here at Shelter in Place, a lot of listings were withdrawn. When a listing is withdrawn, the MLS counts it as an expired listing when the expiration date occurs. And so a lot of these expired listings were actually withdrawn listings that are now also getting double counted, in my opinion, as expired listings. You can also see very recently we're back to pretty close to normal. And that's because most of the industry will take a 6-month or less listing. And since Shelter in Place was announced in March, now that we're past September, most of the 6-month listings have already worked through the system. And so I'd expect this to be much more normal. And you can see basically starting here at week number 36 onward, it has been fairly normal. Now we're looking at the number of new canceleds. This has been normal except for right at Shelter in Place. There was a huge number of canceled listings, sellers saying, hey, I don't want to be on the marketplace with this, unknown. And then it's been basically normal ever since. Withdrawn listings, you'll notice there's no historical stuff, and that's because the withdrawn listings become expired listings and count on the permanent record as an expired listing. But what you do, the only thing you can do is look and say, if you're somewhere around 25 listings a week, that's not a whole lot when there's somewhere probably around, and this is just a guess off the top of my head, about 4,500 listings. So 2,500 in that pack is actually a fairly small number. Now we look at the overall things put together. So if we were completely normal, it'd all be on the red line. Most of the components are above what we're normally doing. So if you look at it, available listings is the blue line, you're right on the red line, so that's completely normal. If you go up to the orange line, that's number of new listings, that's on the high side. The gray line is number of offers, that's on the high side. Number of new closings is on the high side. Number of cancellations, it's the green line. It's sort of bouncing all over the place. I'm a little surprised on that, but I think maybe people get weirded out with strangers coming into their homes. Now we're looking at overbids. Last week, you'll see there was a deep dip down. It more than made up for it this week. That's just because you're looking at 1 week data. 1 week data tends to fluctuate. But when something like 60% of your sellers are getting more than their asking price, it's a great marketplace. It's somewhere around 102.6% on the magnitude. The magnitude is down because anytime the market has an insult, buyers are more conservative with their dollars and don't overbid by as much. They'll overbid as frequently, but not by as much as they were before. Because back here, when the overbidding was basically as frequent, the amount of overbidding was about 106%. Now you're about at 102.5%. So you can see a fairly significant reduction. This is looking at the distribution of the overbidding. So each line is a given week. So the red line is the current week, and you can see it's pulling up to the right, which is the direction to go if you want a hot marketplace. It had been settling down. You can see there were several weeks right together down here just below where the red line is. But this last week it pulled up. It's hard to see if it will continue or not. But basically what you look at is you look at every condo, townhouse, single family home in both San Mateo County and Santa Clara County that sold during the week, closed, escrow was reported to the MLS, and then you plot it. And so what it basically says right now, if you look at the red line, somewhere around 56%, maybe 57% of the sellers are getting more than their asking price. Then here, 45% of the sellers are getting at least 102, 103% of their asking price. Here, 25% of the sellers are getting about 106%, and 5% of the sellers are getting 14% more than their asking price. So you travel along the line for each week. You jump between the lines to see if the market's heating up or slowing down. And I did forget to update that this is the last 20 weeks since May 29th, not May 22nd. The two outlying lines here are my historical data. So that is single family only in Santa Clara County only. And this line here is the best October ever. And it was October of 2017. This is the best month ever, which was April of 2018. And then these were the worst October and the worst month ever, which were both in 2001. So you can sort of see that we're in the middle of the pack, but we're the best week that we've had in the last 20 weeks. Here's the same graph with just not as many data points. This is going back until July 24th. You can now start seeing the separation. The solid lines are the most recent weeks. So if you look at this, you have the 19th down here, then you go up to the 26th. The 3rd was actually a step backwards, and now the 10th, actually it's the 9th, is a significant step forward. And I probably should point that out. This is dated the 9th because to give myself enough time to do the data, I'm now doing the macro overbidding the day before. And I'm still using 7 days. It's just instead of going from Saturday morning through Friday night midnight, that particular data starts Saturday morning through Thursday night at midnight. It gives me a little time to do some of the more time-consuming data processing. The same with this slide. Well, it's actually through the 8th. It's data gathered on the 9th versus data gathered on the 10th through the 9th. So basically, you have it 1 week before shelter in place. This is what the data DUI was, days of unsold inventory. This is what the current data is. And then this column is whether it favors the seller or the buyer. In Santa Clara County, it clearly favors the seller dramatically. The expensive areas, Los Altos and Palo Alto, it is actually favoring the buyer. And they went from 37 days of unsold inventory to 63. Now, 63 days of unsold inventory is still a fairly good marketplace. It would tell you it's still everything out in 63 days, and that's a balanced marketplace, but it is more towards a buyer's marketplace than it was before, which is why it favors the buyer. You come down to San Mateo County, and it's more mixed. There's a couple areas that are the same. There's a couple areas that are favoring the buyers, and then there's several areas that are favoring the seller. The expensive areas is noteworthy because it went from 150 days down to 78. So that's still a relatively slow marketplace, but it's a dramatic improvement for the sellers. And in the condo market, you can see there's a lot more favoring the buyer. There's only a couple areas, 2 areas to be specific, that favor the seller. The overall county is the same. And then there's 4 areas, 2 in Santa Clara County, 2 in San Mateo County, that favor the buyer. And then the concept is the same. This is the frequency of overbidding. You can see that right now, 61.7% of the sellers are getting more than their asking price. That's up from 52 before shelter in place, so that favors the seller. And again, in Santa Clara County, it's strongly favoring the seller, except the expensive areas. In San Mateo County, it's more of a mix. And the condos, it's basically more a buyer's market in San Mateo County, more of a seller's market in Santa Clara County. Looking at the magnitude of overbidding, you can see all the red has disappeared, and this is just because the buyers are more hesitant with their dollars. They don't want to put out dollars when the market could go the other way. So they're overbidding as frequently, but they're tighter on how much overbidding they'll go. And then somewhat surprising, if you come over here to price, all single-family homes are up from before shelter in place. You can see the different dollar amounts. And then if you look at condos, it's basically flat. 2 areas are flat in Santa Clara County. 2 are actually down. San Mateo County actually somewhat surprised me that 3 of the areas, actually, I guess there's only 2 areas. 2 of the areas in San Mateo County are up. It's also interesting that in Santa Clara County, it's up for the expensive areas, but because it's condos with fewer homes, I include a greater area in my expensive areas. That would be areas Saratoga, Los Gatos, Cupertino, Sunnyvale in the expensive areas for condos, Mountain View, Los Altos, Palo Alto. So it's a bigger area, which may have something to do with it. Now we're looking at the heat graphs, and I'm more comfortable with the colors. I'm still not real comfortable with the dark deepness of the blue here, but it should definitely be blue. What this does is shows the days of unsold inventory. How fast is the marketplace? And here's the actual data here. So in South County, you only have 18 days of inventory. That means everything on the marketplace right now would sell in 18 days if no listings came on the marketplace. And that's just amazing, because that marketplace balance is 75 to 150 would be what I consider to be a balanced marketplace. And for it to be the second hottest area is just unbelievable. The hottest area right now is the Milpitas, North Valley, Santa Teresa, Blossom Valley area. And I will say that it's normally Los Altos, Palo Alto, which is actually the slowest. So there's definitely been a move of the marketplace. But the way you quickly look at this, here you can see white. White is going to be anywhere between 50 and 70 days of inventory, balanced marketplace. The blue is a seller's marketplace, and the red is the blue is a buyer's marketplace, and the red is a seller's marketplace. And the intensity of the red is how far into the seller's marketplace it is. Now we're looking at the frequency of overbidding. It's the same concept here. With the frequency of overbidding, it's how often are sellers getting more than their asking price. So again, you can see even though one of the hottest marketplaces is down here in South County, they don't really have that frequent overbidding. That is an isolated community that just hasn't been subjected to the overbidding that we've seen in the San Mateo County and in Santa Clara County. But anyway, concept's the same, fairly neutral. Foster City is a very small, so it fluctuates more than the most. You can see the coast is warming up a little bit. It's pretty apparent. I don't need to spend a lot of time on it. Now we'll look at if I can advance my slide, we will look at the magnitude of overbidding. And you can see it's more subdued, whiter in color. Here it's your hottest marketplace, but it's pretty pale. So even though it's the hottest marketplace, they're only overbidding 101%. In East San Jose, that was a cooler marketplace as far as the pace of the marketplace and even the frequency of overbidding, it's overbidding by a greater amount, which you normally wouldn't expect. And I'm again blaming that on this is normally a very cool marketplace in South County, so those agents and consumers aren't used to overbidding, so they're resistant to do it. The concept is the same. Blue is indicating below 99%, so you can see here it's slightly blue and you're at 98.8%. White is somewhere between 99 and about 101%, I believe was my cutoff. And then as you go into the red, you're above 101%. Then I think this is about the second to last slide before I can take questions. This is pricing. What we're doing is we're looking at the price relative to the median. The median is almost always going to be Redwood City, just the way it works locally. The redder the color, the more above the median price it is. The bluer the color, the more below the median price it is. So very quickly here, you can see where the affordable homes are, and then even up here in North San Mateo County, and a little bit along the coast. And then the expensive homes are sort of in the central part of the valley on the base side of the mountain range. This is a new graph or new chart that I haven't put out before, and I'm always a little hesitant to put too much weight in it. And the reason for that is the market does a lot of things when you look at it that can surprise you. What I did is I looked at what the market share of each micro market was prior to shelter, well, actually a year ago, compared it to this year. So what's interesting is Los Altos and Palo Alto has lost 1.8%. And you might not think, wow, that's not that much. But if you look at their share, they will drop from 7.7% down to 6%. And that's a drop of like 20%. So they've lost 20% of their market opposed to a year ago. Now, each one is only a 1-point data point, which are 5 weeks in duration for this graph. But what is really noticing, and this is what I'm seeing in the marketplace, people are fleeing Los Altos and Palo Alto, and those extra transactions are coming down to Los Gatos and Saratoga. And I think that reflects what I believe is happening in the marketplace, which is with shelter in place, families need a bigger home. They don't want to lose their property tax if they're over at 55. So they're going from the more expensive Los Altos, Palo Alto area to the Saratoga, Los Gatos communities, which are slightly less expensive. They can get slightly more home. They can still commute to work, but they don't have to go in every day. So they're willing to do that trade-off, and they can keep their property tax, which for some of those people is a major hit. And then you can see South County is up significantly at positive 0.8%. East San Jose, the affordable areas are down, and I think that's mostly because the people that tend to live in those areas and buy in those areas tend to be more of the jobs that were impacted by shelter in place. So I don't know if I'm going to keep this or not, but it's just something it's easy for me to do on a one time. I've tracked the data forever, but I've never plotted it because it really wasn't that useful. But the other thing that this was done for originally, the reason I track it, was to try to explain to people why the median price in a county can be going up when property values are going down. And that's because you can have shifts from more expensive to less expensive or vice versa areas. And if all of a sudden your shift is to more expensive areas, your median price is going to be up even if the individual property values are going down. And with that, I will see if anyone's got any questions. And just to give you some guidance after this, instead of going into this a little slower in more detail on the weekly data, because it's the second Saturday of the month, I am going to be going into monthly data. So if anyone's got a question, unmute yourself and ask away. Otherwise, I'll jump to monthly data. Okay, so this is starting the monthly data. So this is the month of September, my month of September. And at this point, you can ask questions as I go along because more people are familiar with this. September starts on September 1st and goes for 35 days, which is through October the 5th. And that's because real estate has a very weekly cycle, and I don't want the calendar to impact it. So this top stuff is what's currently on the market without an offer. So this is what buyers can do. So it's almost initially a little conflicting, where you sit here and say the median days on market is 20, and then you jump down here to offers accepted and it drops to 8. How can that possibly happen? What happens is you have two marketplaces. You have the marketplace where prices are competitive and they sell quickly. That's this 8 days. The 20 days is what's currently on the marketplace, and that's because it includes the overpriced turkeys, the houses on busy streets, and so it's a lot slower marketplace. Looking at what's happening here, you can see you have 26 days of unsold inventory. So countywide, we sell everything in 26 days. If you look back, you had 24.6 days in 2017, which was a very strong year. That was the strongest year I've seen in my career. We had 2 rounds of appreciation. But other than that, you look back here, we're having the second fastest paced September in the last 21 years. Or I guess this is only 20 years of data, in the last 20 years. That's pretty significant. You look at the median days on market at 8 and come back to 17, we're faster as far as time on the marketplace than we were in 17, which is actually a little bit surprising. Even though we're slower on DUI, we were faster on median days on market. It shows you that each metrics you use gives you a slightly different answer, but both would say that 17 and 20 are the 2 fastest years out of the last 20 years, which is pretty amazing. Median price, this is the median asking prices. We don't know the sale price, 1.3, call it 80, $1,380,000. Sales per day, 34.7. If you look back to 2017, we were only selling 28.4 homes. You keep coming back, you have to go all the way back to 2012, where homes were flying off the marketplace after the 2007 recession. This was the recovery years. So you have to go back to this period of time to have any time that was faster. And then if you go back even further, it was faster. And that's one of the concerns in the real estate industry, is we are selling fewer and fewer homes every single year, and the trend is becoming pretty clear. But this is one of the best years we've had in the last decade. Well, call it the last 8 years, back to 2012. This comes down to tell you what the median square footage is, so you have some idea of what that house is that's being sold. And then you go on to closings where you get sale price. For these homes, you can see the median days on the market was 9, so it's a little bit slower, but now you've had to go back for 30 days for the duration of escrow plus the time frame. So you're going further back in time, close to the shelter in place. So basically what it's saying is the market's heating up because you've gone from 9 days down to 8 days. And here now you have a sale price, so you can do your overbid ratio. You can see 102.7% of the sale price, or the list price was the sale price. So the sale price was higher than the list price by 2.7%. You can see that 62.2% of the sellers got more than they were asking. And again, this is single family homes in Santa Clara County during the month of September. And then you can see the median price is at just over 1.4. I think it's $1,408,000. I also tracked the 10 percentile price, which is the cheapest 10% price of the home, as well as the 90%. So you know that 80% of the homes are between those two numbers. And between friends, we could call it 700,000 and 3 million. So there's a $2.3 million range where 80% of the homes are sold at. And the list price, the number of closings, basically almost 1,100 homes. And again, if you go back, that way outperforms 2017, which only had 900 homes. You keep coming back. You got to come all the way back to 2005 in order to get that kind of volume. So, if anything, shelter in place initially, and I did delete it this week, I took out the $4 billion loss from shelter in place being initiated through maybe middle of August. We lost $4 billion in transactions. We're starting to regain a fair amount of that, and maybe I need to start recalculating what that is and share that, but we're regaining a lot of those transactions, which is encouraging. Now we're looking at things graphically, which is easier. This is semi-log paper. This is going all the way back to 2000 even. And basically the slope of the line would be the appreciation. So this is the bottom 10 percentile of the marketplace in Santa Clara County, the median that most people follow. And this is the 90 percentile price and what the top end of the market's doing. And basically there's been, in 2020, that we're in right now, the prices have been basically flat. The high end going up a little bit, but look at the median. I mean, you can't get a flatter line than that. And the low end has been going up a little bit. So median's been pretty flat. Low end's going up a little bit more, and the top end's going up the most. Now you look at it on the more normal graph, straight graph. The old horizontal lines are the previous peaks. So this was the previous peak from the 2007 meltdown. So you can see the low end of the marketplace took quite a long time to get to that peak, sometime mid 2016 before it got there, where the median price got there, early in first quarter of 2014, and the high end got there in first quarter of 2013. And the high end also went down later. So it was a much shorter duration because the high end got impacted more by the August 2008 meltdown in the stock market versus the financial meltdown in February of 2007 that hit the low end of the marketplace. So the low end of the marketplace had a much longer duration recession to recover their pricing, but everybody's recovered it. Prices has been flat, as you can see. Moving on to sale price to list price. Again, this is the frequency of overbidding down here. You can see that you're above 60% in Santa Clara County. You're somewhere around 62, I think it was 62.6%. It's down from the peak of this year before shelter in place. You can see the huge impact that shelter in place had. You can see the impact on overbidding. This looks closer to 105%. I think it was actually closer to 106, but maybe I'm remembering wrong. So call it 105%. And now you're essentially at 102.5%. So even though your frequency of overbidding is almost as high as it was here, you've lost half the magnitude of your overbidding. And you can see we've had, I think this was a 12% overbid, 12.8% overbid back here, which is our all-time record high magnitude of overbidding. This is sort of a nod at the advanced decline ratio in the stock market. Some people like this graph. I don't think it really adds anything because when you get to the extremes, it goes way up. But I think the frequency this graph here tells you, it's basically the frequency of overbidding graph. So this tells you the percentage, this tells you the ratio. And as you get to say 90% of your homes overbidding, and I guess it's close to 80%, at 80%, you have an 8-to-1 ratio. So as you get to the extremes, the lines drop a lot more dramatically, but to me, that's not all that telling. I'd rather see it on the percentage scale. Here is what I think is the blue line is the single most important data point. It's days of unsold inventory. That's your supply-demand ratio explained on days on how long it would take to sell everything. You can see the huge slowdown. This is one of the few data points where the lower the number of days on the marketplace, the faster it is. So here, as the data goes down, the market's improving. So you can see the impact of shelter in place. Now you might be saying to yourself, well, if it's slowing down, why are these going down? Why are these looking like the market's accelerating by going down versus going up as days of unsold inventory? The MLS made a decision not to count days on market during shelter in place. So we were selling homes that were coming on the marketplace, but their counter stayed at 0. So the average and median days were dipping, then they were recovering, and only basically from this point onward is the data meaningful again. And so you can see it caught back up, and then the trend matches the direction because you'd expect all three of these lines to move in the same direction. The blue line, the advantage of the blue line is it tends to move more rapidly and more instantly. So, you can see here, it's easier to see, like here, I would actually say the blue line started to go up right at this point. But if you look, the other two lines are continuing to go down. So one is more of an instantaneous, one has a lag time because you have to let the days on market count up. Here I'm just looking at a 12-month moving average for all the data points that are smooth, superimposed on the real-time days of unsold inventory. Not sure it's that meaningful, but it basically says the market has been fairly well behaved from 2013 through mid of 2017. Here's where the market went crazy in 17. So you can see inventory came down and then it recovered, it overshot, and it was coming back down. And now we're a little bit on the low side. Here is your sale price. This compares only single family homes in Santa Clara County to past years in September. So we're looking at September data, Santa Clara County single family homes, and you can see the red line is the current line, and it's towards the upper end. I mean, here's 17, which is the year that I said was unbelievable. If you ignore 17, 2020 is about the best year we're having. Now, I would call it tied for, second place with two other years. You clearly have to give 17 the hands down victory, but it's tied with these other 2 years. And if you look at them, they're solid lines. So they're in this first group up here. One appears to be the green color. So I'd label that B15, and I'd probably call it 16. It's either 16 or 14, but I probably would tend to call, I might be able to call it 14, because here's the other one, and that looks more like the color for 16. So we're probably the same as 14 and 15 in 2020. Whatever the years are, these 3 years are basically tied for second place behind 2017. You can see the dotted lines are the older lines, and they're the cooler lines. So this is going back to 2004, back to 1998. Here is just the same data looking at the last 12 years, so it's a little clearer on what's happening. And now you can see these are dashed lines. So again, either it's 16 or 14, but I'm probably going to go with 14 because this looks like 16 down here. So you have 17, 15, and 14, and then 2020. And again, this shows you the percentage of sellers for this year. 45% of the sellers got 103%, call it, or more over their asking price. And again, here 15% come up to the red line, somewhere around 109, maybe 109.5% of their asking price. Here is just doing a ratio between, for the bottom 10 percentile price to the median and the top 10 percentile to the median. So when the lines came together right through here, you had price compression. Then you can see the slowdown in February 2007 from the mortgage meltdown. The low end dropped down, became cheaper compared to the median. The high end actually continued to become more expensive. And now we're having some more price compression going on here, but much slower. So it just tells you whether prices are getting further apart or closer together. So that finishes up the monthly data. I'll pause real momentarily to see if anyone has questions.
I have I think I missed something on page 93. It's the table.
All right, let me get down there.
Okay.
There I am.
Okay, yes. Is this, are you saying the upper part is the Santa Clara and then it's down?
No, the whole table of Santa Clara County single family homes only. The upper part is active listings that are currently on the market. Then here you can see it says offers. So from where the date years go across here, from offers down to closings are sale pendings, but I don't use sales pending, so I shouldn't even use that word. Offers accepted in the last 5 weeks, and then these are the closings in the last 5 weeks. So it's by where you are in the transaction.
Okay, so it's single family in Santa Clara.
Single family Santa Clara County only.
Okay.
So when I'm doing the weekly data, I'm doing the macro data, just trying to see what's happening to the tide. Is the tide going up or down? And clearly the tide for the most part has been going up. Here I'm trying to compare a little bit of apples to apples by looking at what's happening in Santa Clara County only. And I'm a firm believer, and the whole reason I have the micro market data that we're about ready to go into is one micro market could be improving where other micro markets can be deteriorating.
Okay, thank you. Yeah, no.
You're welcome. So I'm going back up here to the weekly data. And so now we're going to start looking at some of the micro data. So here are and this is single family homes, obviously in both counties. And now we went back 5 weeks. So September the 12th. And what we'll do is we'll step forward. And this is the percent overbidding. So the redder the color, the more the sellers get, not the more sellers, the greater percentage of sellers are getting over their asking price. So you can see there's a fair amount of change in color. The last 2 weeks, from here, from 3 weeks ago, the 26th, the 3rd, and the 10th, you can sort of see colors getting deeper, and that's as the percentage of sellers getting overbidding goes up. And this is where we are this week. Now we're going to look at the same thing on days of unsold inventory. So this is the pace of the marketplace. How quickly is the market moving? Again, going back to September 12th, and that's pretty red hot if you really look at that, and that's partially now why the closings, sale prices are more higher, where you're seeing more overbidding. Because here buyers were desperate, so when they're desperate, they raise their offer above asking price, and then it takes 30 days to close an escrow with shelter in place. So what happened with this graph is essentially our chart map is what's now getting closed, and so now you can see, their market isn't getting particularly hotter. It's sort of staying neutral, and actually, I would argue that I think this graph overall is a little bit lighter shade of red than this one. It's pretty even, but I guess where there's been some areas where there's been a big change. Look at the Cupertino, Sunnyvale, Mountain View just in the last week. You go from here where, Cupertino, Sunnyvale is at 24 days. You know what? That was a wrong chart. I forgot about that. I had an error in my graph last week. So it went from 24 to 26. So it actually slowed down, but the color is a lot harder. What I'm doing now is I'm doing these graphs also a day early, even though this says the 10th, that should say the 9th, a day early, so I have time to catch those mistakes. So this should be much deeper red, I believe. Well, I know it should be, because if you come over here, it's at 24 days, which should be a red color, not a pink color. Now you're looking at the actual data for each one of the micro market areas. And again, over here, you can see this is Santa Clara County single family homes. This is San Mateo County single family homes. This is condos and townhouses in both counties. So you can look at whatever area you're interested in and get the data and get a better feel for what's happening in that marketplace. This is the September data that we've talked about. Now we're going to look at what's happening with 11 different metrics. We're going to talk about one slide each, but this just shows you the 22 different micro markets, what's happening with days of unsold inventory, which I think is the key indicator. The red line is pretty hard to see. That's the current data. That's Santa Clara County, so that's the biggest single micro marketplace. And then if you move down here, now you can see it. So this is the slide we'll talk about. Days of unsold inventory is the key indicator because it's the supply-demand ratio. Here on the 16th of March was when shelter in place was announced, when it started to impact the real estate marketplace. If you look at it, the yellow line is condos and townhouses in Santa Clara County. It was the hottest micro market group. Coming out of shelter in place, it's the coldest. It's clearly indicating there's been a shift in the consumers away from condos and townhouses. And I think that's because people are spending more time at home. They want more privacy. Single family homes were doing pretty well. Santa Clara County was unusual in the fact that it was faster paced than San Mateo County. Historically, San Mateo County is the faster county. Coming out, their ratio is the same, their magnitudes are the same. They basically weren't impacted by shelter in place except during the transitional periods. Now we're looking for days on the marketplace. And again, I've already commented about that. From basically shelter in place being announced to here, where the lines became fairly level again, you can't pay attention to median days on the marketplace because the MLS counted them at 0. So what this tells you is basically from April the 18th through March the 23rd, May 23rd, 50% or more of the homes that were being sold came on the marketplace during shelter in place. So they were coming on and selling while we were sheltering in place. Here's current inventory available in the different micro market areas. Here we can look at it on here because the micro market areas line up based on size. So the three big ones I like talking about are on top, Santa Clara County being the biggest, then San Mateo County being the gray, and Santa Clara County condos being the yellow. Here you can see single family homes in San Mateo County and condos and townhouses in Santa Clara County were roughly the same magnitude. Now there's more condos available because they're not moving as quickly. Here's offers accepted, same concept. Santa Clara County, all of them, you can see them come down, you can see them recover, you can see the order is going to stay the same. But look at the condos. The condos were outperforming San Mateo County single-family homes. Now San Mateo County single-family homes are outperforming condos. Again, that shift that I talked about. Looking at closed transactions, same pattern as the previous one, but delayed by 30 days because of the length of escrows. Here's the frequency of overbidding. Condos were actually the hottest marketplace, and they're still the hottest, which actually is a little surprising, but, and they're hotter. So even though they slowed down, the concern to overbid is higher. They went from 30% to 50%. So that's a pretty significant increase.